Why your accountant never told you about this $10,000 plus income tax hack. I teach advanced financial strategies and specifically help landlords pay off their mortgage 8 to 12 years earlier than planned. Tune in. Hello everyone, my name is Sylvia Ho and I'm a financial landlord consultant. I'm also a mortgage agent for the last 25 years and I specialize specifically in working with landlords to help them save money, save taxes, and decrease the interest that they pay. If you love the weekly training that I do, please like, love, comment below to encourage me to do more of these trainings. And if you're watching on YouTube, please subscribe to my YouTube channel. I teach a strategy called rental cash damming. And when landlords apply this specific strategy correctly, they will pay off their mortgage, their primary home mortgage, 8 to 12 years earlier than planned. If you'd like to learn more about the strategy, go to my website at cashdam.ca to watch this free life-changing training. Rental cash damming and 3 commonly asked questions about the line of credit. Now, before I dive into the 3 commonly asked questions, let's understand the rental cash damming process. Rental cash damming is a cash flow reallocation strategy that uses your rental income more smartly. It uses your rental income to prepay your primary home mortgage, and then you use your line of credit to pay for the rental expenses. Because you see, when you get that rental income, no one says, CRA does not dictate that you must take that rental income to pay off your rental expenses. When you get that rental income, you could do whatever you want with it. When you use your rental income to prepay your primary home mortgage and use your line of credit to pay for the rental expenses, you will receive tax savings. And these tax savings typically come in the form of tax refunds. Clients who've implemented this strategy with me will receive anywhere between $10,000 to $100,000 of tax refunds. So the first thing that's probably going through your mind is, Sylvia, if this is true, why haven't I heard of this strategy? It sounds too good to be true. Great question. This strategy, rental cash damming, has actually been around for a few decades now, and it's the best kept secret by Canadian landlords. When it first came out, CRA did a huge audit on it, and then they even approved it, and they even wrote their own bulletin on it called the IT 533. So it's totally legit and approved by CRA. In fact, the 5 big banks even have rental cash damming on their websites. And they've written about it, but they don't actively promote it, just like CRA doesn't actively promote it. Now, for obvious reasons, because the 5 big banks, when you pay off your mortgage 8 to 10 years earlier than planned, they're gonna lose out on interest from you, right? They're gonna lose out on money. And obviously CRA is not going to promote it because they lose money every single year in the form of tax savings, tax refunds, so they don't actively promote. So my job as a financial landlord consultant is to shout it out to all Canadian landlords to apply this strategy. This strategy, in my opinion, should be applied by every single landlord. Just how, Canadians put money aside for RSPs, RESPs, TFSAs, my belief is that every single landlord has to apply this strategy. So the question comes down to is, why isn't everyone doing rental cash damming? Well, you don't know what you don't know. Most people don't know about it. I didn't know about it. Most people don't know about it, and therefore, if you don't know about it, you don't know what questions to ask. You don't know what you're missing out. When it comes down to rental cash damming, it requires sophisticated financial planning. It requires that you are organized and you are disciplined and you have proper implementation. As a financial landlord consultant, I work with my clients side by side and show them how to start up rental cash damming, how to do everything properly so that you check off all the boxes and you can show your accountant that you've been following CRA rules. Now, why hasn't your accountant told you about it? Well, accountants are not really there to teach you advanced financial tax strategies. They're there to file your income taxes. Because accountants account for your numbers in the past year, right? So they don't come teaching these advanced financial tax strategies. So again, that's my job. All right, let's dive into the 3 commonly asked questions about line of credits when it comes down to rental cash damming. Question number 1, Can I use my unsecured line of credit to do rental cash downing? And the answer is no. No, you cannot. And there's two really big reasons why. Unsecured line of credits are typically very, very small. They're tens, $20,000. And when it comes down to line of credit, rental cash downing and line of credits, we need higher limits. That's the first thing. Second thing is unsecured line of credits are way more expensive than secured line of credits. Secured line of credits are prime plus a half. Unsecured line of credits are prime plus 4, prime plus 5. So it's much more expensive. And the third thing is unsecured line of credits give you very, very, very poor cash flow, because with unsecured line of credits, you must pay them back at 3% of the outstanding amount every single month. But with secured line of credits, it's interest only. So if you go use a unsecured line of credits, for anybody who are DIY and they understand the risk of doing this yourself, you're going to run into a major roadblock. You're going to run out of money and you're going to end up stopping. So please, my friends, do not use an unsecured line of credit. Use a secured line of credit. Question number 2. Line of credit. Secured line of credits are prime plus a half. So prime right now is 4.95 plus a half. You're looking at 5.5%. Let's just round that to 6%. Okay. How does that make sense, Sylvia? Why would I pay a 6% interest rate when my mortgage is sitting at 4%? Let's do some math. Before you're doing rental cash downing, you are paying your mortgage with after-tax dollars, meaning you get no deductions. But after you do rental cash downing, you're going to pay a higher interest rate on the line of credit, but you generate a tax deduction. Let me give you an example. Let's just say you are at the 40% marginal tax bracket. If your line of credit rate is at 6% and you're at a 40% tax bracket, your effective tax cost is 3.6%. So you go 6% times 0.6. And if your mortgage rate is at 4%, you are still paying more on your mortgage because you haven't converted your non-tax deductible debt into a tax deductible loan, which provides significant tax savings. So this strategy, rental cash downing strategy, works really, really well for individuals who pay taxes, and everybody pays taxes here in Canada. That's the benefit of living in Canada. You pay taxes. Anybody at a high tax bracket get even more benefits. The interest, the strategy also works best when you get consistent rental income. Next week, I'm going to talk about the do's and don'ts about rental income. So tune in next week about rental income. All right, question number 3. Which lenders offer the most suitable line of credits for rental cash downing? Typically, it's one of the 5 big banks. For example, TD offers their TD Flex line, RBC Home Line, BMO Ready Line, Scotia Total Equity Plan, CIBC Home Power Plan. There are some exceptions to not the 5 big banks, but typically it's the 5 big banks that work best with rental cash downing. So no mono lines, no CMLS First National, RMGs of the world, no alternative lenders, no B lenders, no private lenders. It must be one of the 5 big banks that offer a secured line of credit, a re-advanceable line of credit, so not a line of credit in second position. Now, key things to look out for when it comes down to the line of credits is their interest-only payment options, their ability to access the money, flexible repayment terms, and online access for easy management. The one caution between all of these banks is that they're not all re-advanceable line of credits are not the same, and therefore they don't react the same, they don't work the same for your rental cash downing needs. So everybody has different rental cash downing needs, and not every line of credit that the big banks offer work perfectly with that. So I'm going to give you an example. A car. If you have a race car and you put in regular gas in it, it'll still get you from point A to point B, but it won't be as efficient. But if you have a race car and you put that high fuel octane gas in it, it will run much smoother. Every line of credit runs a little bit differently, so some will run smoother than others. All right, so those are the 3 questions when it comes down to line of credit and rental cash downing. If you would like to learn more about rental cash damming, comment me below and I'll send you a link to book a complimentary 45-minute Zoom appointment. And in this Zoom appointment, let's see how much money you can get back from the government, how much money you can get back from interest savings from not having to pay your mortgage on your primary home, and when you'll attain mortgage freedom. So comment me below to book a time with me and let's chat. It's absolutely complimentary. It doesn't cost you anything to have an initial call with me about rental cash damming. Make sure you answer all of the questions so that I get an idea of where your finances are. And if you would like to learn more about rental cash damming, you can go to my website at cashdam.ca for the free training. Thanks so much for tuning in, everyone. My name is Sylvia Ho. I'm financial landlord consultant. I work solely with landlords to help them save money by paying less taxes and decreasing interest that they pay the banks and attain mortgage freedom. Tune in next week as I talk about more training. What did I want to talk about? I forget now. Oh yeah, rental income. What rental income is acceptable and not acceptable for rental cash damming. Tune in. Take care, guys. Bye.